The following content is meant purely for educational and informational purposes and should not be relied upon as financial, investment, legal, tax, or any other professional advice. This is the Fundamentals podcast, where we demystify crypto and help you navigate this ever-evolving internet-native economy.
Let's get to it. Arthur, welcome to the Fundamentals podcast. It is really great to have you on and get a chance to dive into what's going on at Tezos.
Thank you. It's good to be on.
Awesome. Now, to set the stage before we start diving into more specifics, could you quickly describe Tezos from the perspective of what the core problem is that you've set out to solve?
Sure. So there's more vocabulary now to talk about it than there used to be. So Tezos is a layer one blockchain. It's a blockchain, it's a network, it's an open source project. And the problem it set out to solve was, as cryptocurrencies and blockchain networks grow, they face a difficulty, which is you need to take some form of collective actions around it. That could be deciding to upgrade to better algorithms or changing the rules of the protocol. It could be funding common goods. Of course, most decentralized blockchain out there fund their own security. They have block reward, but there's many other things besides securities that you might want to fund. But at the same time, staying decentralized. And the method that's been currently used in this space, which is fork-based governance, I realized essentially was very centralizing because it becomes a coordination game where everyone's trying to guess what other people are going to treat as legitimate, as opposed to expressing their opinion. And so Tezos set out to solve this, and it's how can you have a system that is not prone to social capture while still being able to upgrade and be sustainable and take care of its own ecosystem from the get-go. And that was the original idea behind Tezos, and it's been going strong since 2018.
That's great. And for building adoption for an ecosystem like Tezos, you need to build great applications on top of it. Could you speak a bit about what makes Tezos compelling from a developer's perspective to come and build applications on your network?
Yeah, there's several things. I think the first one is the longevity. The network has been designed to be able to sustain different waves of evaluation. It's upgraded already 15 times. And so if you want to build a decentralized application, you're typically not going to keep the keys, right? It's still popular today for people to have upgrade keys, but if you really want to build decentralized application, really unstoppable applications, you want the platform that you're on, you want to make sure that it's going to stay competitive. And Tezos has shown an ability to do that. We're now with a 15th upgrade and a chain is now much faster, lower latency, more performant than it's ever been. And it's demonstrated that over the years. So the staying power, I think, is very important. And to give you some sense, right now, one of the main focus has been on throughput. We demonstrated last year a 1 million TPS on the chain. So we've been able to do that via scaling solutions. We basically put rollups and made them a first-class citizen in the protocol. We're now very focused on latency as well and developer experience. So good developer experience, low latency, extremely cheap fees because you have essentially very, very high available throughput. Those, I would say, are very strong reasons to build on it. Decentralization is an important aspect. And I would say also the community and an ethos, I would say, of participation and an ethos of decentralization.
Wonderful. Now, 1 million TPS is a figure you don't hear too often in crypto. So that is definitely fascinating.
Well, you hear about it when they talk to you about what Solana intends to do, but we've actually done it.
That is very true. You do hear that term in the intentions and the very, very long-term roadmaps of people, but it's a different game to have done that already. Now, that's impressive. And you also mentioned that 15 upgrades along the way. So there's been a lot of work on the tech side, kind of summarizing everything that's happened there and focusing on the state of where you are right now. Could you speak about the main innovations in your tech architecture and consensus mechanism today that enable you to get to that 1 million TPS?
I would say people look at governance and then they think like, oh, what does it do? Is it so important? Can't we just trust one person to have the roadmap? But you don't just get governance out of it. The fact that we spent so much work making sure that the protocol was easy to upgrade, and that it's not just about the governance. It also is like very, very good at hot swapping itself, and so it's made it more nimble. And I think that's a key component in getting where we were in terms of scaling. But as to the technique we use for scaling itself, essentially it's optimistic rollups. Now you see a lot of optimistic rollups out there. Most of them are completely centralized. So if you take Arbitrum, for example, it's completely controlled by the Arbitrum Foundation in the form of a multi-sig. But at least, in principle, they have fraud proofs. So there's some security model on it. Optimism has zero security. It's entirely trusted. And we did the silliest thing, and we actually went and built like real optimistic rollup, decentralized with fraud proof. The difference as well, aside from like doing it for real, is that we made them first class citizen in the protocol. It means that you're using directly the protocol properties of Tezos to build smart rollups as opposed to a smart contract on top of Tezos, which gives a lot of performance benefits and ease of implementation benefits as well.
Okay, got it. And do you, at the moment, because when I'm going to speak with like blockchain teams, usually the discussions focus on, there are certain technical bottlenecks or limitations to what we're trying to achieve. And then there's adoption related limitations. On the technical side, do you have any bottlenecks at the moment that you're like trying to actively crack? Or from a tech perspective, is Tezos kind of already there?
Yeah, so the execution is only one of the bottleneck, and so that we took care of with rollups. But in our demo, which was a part of the Mumbai upgrade, we did use data availability committees for the data availability, which means that the data availability was not on the layer one. That's not acceptable. And so one of the big things we're working on at the moment has been a data availability layer for Tezos, which uses data availability sampling. So the data is encoded using an error correcting code. It's spread over the validators of the network that each have download a piece of data in proportion to their stake, and then failures can be if the data is missing, it can be reconstructed, and clients can sample the data and make sure that it's all present. So it's what people refer to as dank sharding, for example, in Ethereum. We're seeing a limited version of that in Celestia, but we implemented this. I would say we're pretty clear on a roadmap to actually like getting fully on-chain scaling. The only part I think which are a little less clear is how will this be handled by the peer-to-peer layer, because that's way more empirical. You can have the theory of it. Actually, like getting the peer-to-peer network to work at low latency around this is something that you learn over time.
Okay, I'm glad you brought up data availability, because I wanted to speak about that, as in like the modular stack involving Celestia DA has been a topic that's got like a lot of attention.
Yeah.
And when I was researching what you're doing in Tezos right now with the data availability layer, there are some pretty core differences between these models. So could you really, in layman's terms, kind of speak about how your approach differs to, say, what's going on with Celestia and why your approach is optimal?
So I'm not a Celestia expert, but here's how I think they work. You have a set of validators in Celestia, and their validators download the entirety of the data. So they all download all of the data, but you keep them accountable by sampling. So you can sample from the Celestia chain. You can ask those validators, hey, give me like this part of the data and that part of the data, following error correcting code. And if they fail to do that, then you know that you have that availability failure, and so you can treat it on your side as a liveness failure. A lot of the tricks in this whole space is turning safety failures into liveness failure, right? So imagine you want to create what they call a sovereign rollup on top of Celestia. You send your data there, and then you have your own client. And if your client, is sampling those nodes and they're not giving you all the data, then something's up. Okay, but they're still in a mode where everyone has to download everything, so it doesn't actually scale. It scales in the sense of like you'll have bigger computers for doing this and smaller ones, but it's not really scalable. The approach that we're taking is much closer to dank sharding, in a sense that the data is really spread over its validators, and so you have to download the data that you download is proportional to your size in the network, and that's way more scalable, because if you increase the bandwidth, right, the bandwidth you want out of your data availability layer. Let's say you want to make a gigabit of data per second available on your data availability layer, you're putting some constraints on the validator. In our model, because it's going to be proportional to your stake. So if you're a very small validator, you're going to download a very small amount of data. If you're a large validator, maybe like Coinbase is a large validator on Tezos, you're going to have to download a large amount of data. But that's great for decentralization, because the large validators actually have more resources and are more able to do this type of things. So that, I think, is a key difference. And the difference with what Ethereum is doing is Ethereum is very focused on having a single slot. So there's just like one big blob of data that everyone agrees on. And we have multiple slots. So you could be using a small amount of the data availability or a bigger amount. The reason they're doing a single big slot is they essentially want a single they want like a single proposer who's going to internalize all the MEV, because they feel like otherwise it forces the block producers to do this MEV optimization. I'm not sure it's a great trade-off, because I think there's value in in spreading over multiple slots if you have smaller rollups who only want to consume a small amount of data. But it's evolvable. We could evolve in these directions.
Okay. Yeah. Thank you for laying that out. I feel the whole data availability discussion is a bit of a mystery for a lot of investors from the outside in to try to understand what the actual implications of that might be. And kind of building on that, are you able to speak a bit about the implications of the data availability layer on, say, from a user's perspective and interacting on Tezos?
From a user perspective, all of this should really be transparent. Sometimes people think of like rollups as like enabling new application, or like, oh, can you do this and that as a rollup? And my usual go-to is to tell them, look, it does the same thing as a blockchain, right? Whether or not you have like a sharded observability layer or rollups or all of this is going to do the same thing as another one. The one benefit you get out of doing this is performance. Like you just get more throughput and you can put more data. Now, people say quantity has a quality of its own. So if you start having like way more performance in your throughput, it doesn't just mean that your transaction gets very cheap. It also means that you can adopt different model for your smart contract languages. So one of the things that we're doing, for example, is trying to bring mainstream programming languages like JavaScript, like Python, directly into smart contracts. So you don't use a language that looks like JavaScript or a language that looks like Python. You can directly use JavaScript libraries, Python libraries on your rollups. There's a big overhead for doing this. There's an overhead, which is why people haven't really done it in the past. But if you have as much performance as you want, then you don't care as much about the overhead. And so that brings a better developer experience.
Okay, got it. And zooming out a bit, looking at the broader blockchain market and your position within it, what would you say your greatest strengths are, given the fact that a lot of scaling solutions are tackling the same sort of trilemma in trying to enhance scalability, decentralization, security all at once? So where are your core strengths in that mix?
Execution, actually doing it, because this is still like difficult technology and many people aren't capable of doing that, or they do like simplified version of this. So actually shipping this thing, but also credibly shipping this thing. You'll always have, like some team that does well as one thing and some of the team that does well as one thing, and being able to like do well everywhere and consistently is very difficult. The other thing, and we're talking about the modular thesis, and it's true that the design of Tezos now is modular, but it is an integrated stack. And when people say modular thesis, sometimes they assume that, oh yes, you're gonna launch and roll up on Optimism, and then you'll connect to the Celestia. And by the time you're done, your dApp needs like 6 different tokens to work, and that's not a great experience, I would say, for developers or economically. And so on Tezos, it's all integrated. It's just a single token behind it, and that I think is harder to replicate because the incentive of the venture capital model is for people to keep launching new tokens, and that's not happening on Tezos. So, the DAO doesn't have a different token. We're launching Etherlink, which is a EVM compatible rollup on top of Tezos. That's a test token. So everything is just as you have a single token and this entire infrastructure that works with it.
Got it. Yeah, I think that is a good approach, and it sounds like the right one. But I do agree with the fact that the venture model and also this kind of attention type of economy that is very evident around crypto then makes it tough to get the word out there and keep people interested. And that's also one thing I wanted to ask you about, is what the main challenges for you right now are. And of course, I would assume that one of them is the attention or awareness, because there's the hot new thing popping up all the time. The focus is somewhere else, and you've been around for quite some time. And my personal feeling is a lot of these upgrades have gone a bit under the radar. So that is probably like one challenge. I don't know. Do you agree? But what else is out there?
Oh, 100%. No. You're nailing it. That's definitely the biggest problem. But, and it's a reflection on the industry, right? I've said in the past, we're building this as it is going to matter, right? And if all of these blockchains and all of this infrastructure are going to matter for something serious, I can tell you people are not going to want to use 5 different tokens for launching their apps. I'm going to tell you that they're going to want to use mainstream programming languages. I also know that they're going to care about smart contract security. They're going to care about all of these things. But right now, that's not what the industry is focused on. Right? Right now, the industry doesn't care about smart contract language security. Like you have hundreds of millions being lost to smart contracts. But like clearly today, the rational economic choice for people launching protocol and token is to not care about security because they make money either way. So in a market that's primarily interested in like getting new tokens and trading new tokens, you're going to have a conveyor belt of new tokens being created for building infrastructure. But at some point, either it all comes tumbling down, or like the infrastructure gets used. And so I think that it's right for the long term to focus on like actually getting really good infrastructure. But it's true that there's a very strong bias towards novelty. And so if you look at Tezos, it includes the state of the art optimistic roller protocol, a state of the art data availability layer. Now we're just like launching it on a test net, but it's there. It includes a lot of state of the art thing, but because it's like, oh, it's old. Like, tell me when I'm getting a token. Tell me when I'm getting an airdrop. I think it doesn't get as much attention as it should.
Yeah, I agree, and I can actually resonate quite a bit with that. With what we're building at Token Terminal, it's in the very long run, we're building the infrastructure for the situation where pretty much all businesses and assets are on chain, where we can directly then give them the tools to report real time financial statements to all of their stakeholders, etc. But like as of today, when the majority of attention is in a lot of dog coins and other stuff, it feels like you're like very early and just waiting for that certain catalyst to happen where people start caring about these things, which in your case, you mentioned the economic security and those all those other factors. And I know this might be a difficult question, but in your mind, do you know what the necessary catalyst might be for that attention to shift? Like what are you waiting for?
I think one of the several catalysts that could work. One catalyst would be like meaningful use cases coming and actually like requiring the throughput, actually requiring the scalability, and like being, if someone comes in and says, "Look, these are my technical requirements. This is what I need," I think that this is very well positioned and is going to be even better positioned in the next year. If someone is saying like, "What's hot right now?" Less well positioned. So like substance, like the more substance comes into the industry, the better, I would say, for Tezos. That would be one catalyst. The other catalyst is that I think that this space is largely like reflexivity on steroids. It's basically like if people talk about you, more people talk about you. I have a feeling a lot of people in the industry don't really understand the technology, don't really understand what's going on. And as a result, they feel like it's safe to follow the crowd. So if everyone's excited about this, then that's the thing to be excited about. But it's very strange. So like earlier, like this year, I remember there was like, I don't know, you look at December, November, people are writing and it says like, oh, Ethereum is unstoppable. Obviously, Ethereum has taken the lead. It has a really free modes. It has all these advantages. It's already won. Look, everyone's just now going to be layer 2 Ethereum. And then you have a bull market in Solana for like 1 month. For 1 month, the price of Ethereum doesn't move, price of Solana moves. And then it's like, well, obviously Ethereum has not this way. And it was, no. You're just reacting to like you're just making up a story based on like 1 month's movements. And there's a lot of that going on in the space. So it's reflexive. I think if people get excited about Tezos, then they start talking about it. They start looking at the fundamentals and says, well, of course, we've been sleeping on Tezos, but look, this and that. And it's just very, very reflective. So I would say improving PR and having better marketing and communication about what's going on in this ecosystem could be a catalyst. And the third one that I would see is just getting user adoption numbers and like user activity numbers so high that it just can't be ignored. Because right now, I would say that's probably where Tezos is weakest. It has a very active community, specifically in the art space, very dedicated, really strong builders, but it's relatively small compared to some of the top 5 projects out there. So like getting into those numbers, I think would be a catalyst.
Got it. Yep, that makes a lot of sense. The short-termism in this space is incredible. I think that's an important point that you raised, that right now, even though things might feel that they're progressing slowly, it happens overnight, like what happened with Solana. All of a sudden, the narrative shifts and what wasn't obvious seems obvious, but I guess we've just had to accept that being the case in crypto.
I've seen a lot of people look at Tezos and say like, oh, well, if it was going to happen with Tezos, it would already have happened. So, now move on. And I think, from the exterior, I understand why people might think that. But if you look a little bit at like how the ecosystem has changed and how the underlying stack has changed over the past couple of years, there's been some radical transformations.
Yeah, 100%. You mentioned that user activity and your community right now, that those you need to be focused on a bit more. That's where you'd like to get the numbers up. To understand like the state of current use cases, which dApps and contracts on Tezos are seeing the most user activity today?
Primarily around the NFT and art space. So that would be object.com. And some other contracts are still tied to Hicketnote, but that's actually object.com activity. We've had some games launched with Coinblast, which have they brought a lot of users. So they're small casual games like a trivia game, but they brought a lot of activity on the chain. And then after that, we also have some activity in DeFi between protocol like Sirius, Use, and CordFi, and Plenty, and a few others. But I would say those are the top dApps on Tezos.
Got it. So falls like into the NFT marketplaces, art, and gaming market sectors. Have those been a conscious guidance from your side, like in a business development perspective, to attract users and developers to these verticals, or has it been more of a natural development?
It's a bit of both. I remember, brainstorming session in 2020, like right before, right like basically March 2020, like like at the very beginning of the pandemic, and there was a conclusion that the collectibles markets was probably like a strength for the Tezos blockchain and something to target. And so we did some work in like having the right standards, having the right stack, all of this. And when by 2021, when this market actually started picking up, I don't think we had done as much as we should have done to bring those use cases. But like when those use cases came, they found a good home, and also we were able to identify that this was important and dedicate resource to growing this. So yeah, it's partly conscious and partly also like finding what worked on Tezos and doubling down on that.
Got it. And with those showing some signs of working, are you at the moment doubling down like on the art, gaming, NFT sectors, or are there other sectors that you're kind of trying to prioritize attracting more users and developers to right now?
There's a strong desire to grow, to retain and grow what's been built in the art and collectible space on Tezos, and expand it also to culture, more broadly speaking. But the other two verticals that are of interest are finance and DeFi, and gaming.
And those two, in a sense, when we think of like the scaling solution landscape or general blockchain landscape, I feel like on the DeFi side, a lot of projects are really have an emphasis on security or like DeFi focused chains. And then you have specific gaming focused chains that focus on just transaction throughput and cost efficiency. From a feature perspective, I'm guessing Tezos kind of suits both use cases as well as they could. So you can tackle them both at the same time without having to try to specialize for either.
Yeah, I think one of my point of view, which may be controversial, is that there's not a whole lot of trade-offs in blockchain design. Like there's some, but fundamentally, I think you can be very decentralized and have very high throughput and low latency. You can actually have it all, and the winners will have it all. So I don't see it. I don't see a sense in like specializing from a tech perspective. I see value in specializing from a business development perspective. Like you do want to have concentrated efforts so that you can build meaningful verticals and so you can build network effect within your vertical. But from a tech perspective, I think the best blockchain you can build for gaming and the best blockchain you can build for DeFi and the best blockchain you can build for art are the same blockchain. Like with they're very very small things that would make a difference here. And I think overall, like you can have the best of all.
Got it. So you clearly don't believe in the need to fragment the user or developer experience at all. I
Yeah,
think that's
at
pretty
all.
evident from the way you spoke about it. And I'm sure you do get a bit of a resistance from people when you say that opinion out there because it is a bit against the stream compared to how others have decided to build.
I mean, it's not a good thing. What I'm describing, I think, is reality, and and I would say it's a good thing that I see reality as it is, right? But reality would be more convenient if you could specialize, because sometimes people will say, "Oh, why don't you make Tezos a back blockchain for X?" And I'm like, because there's just like best blockchain, there's no specialization. The lack of specialization means that the market is more competitive because everyone's actually competing against everyone, which people don't want to talk about or say much in the blockchain ecosystem, but it's a reality.
Yeah, that's true.
But I think it's a good thing to see that reality clearly. You don't want to make that mistake, but at the same time thinking like, oh man, would it be convenient if actually you could specialize and like really have the best technology for one particular use case.
Yeah, I guess that's the tough decision and kind of balancing act.
That's just on the core side, right? What I'm saying is just like really for the very, very core side on the blockchain, there's a ton of specialization you can have on your application layer, on your middleware, on support that you give, all of that. That has a lot of room for specialization, but it's separate from core.
That makes sense. Now, following up maybe on the current user activity and kind of most used dApps conversation, internally right now, what are you using to track the development and just follow user activity? And also, if they're like investors or interested community members who want to get a better understanding of what's actually going on at Tezos, where would you guide them today?
So internally, there's some tool there's some internal screens for tracking user activity. So seeing like number of active users, number of active users by cohort. So like let's say we had like a game launch, so how many people created a wallet for the first time for this game? how many people are still playing the game after like a month, 2 months, 3 months, how many of them have tried a different dApp on Tezos. So that's all tracked. There's no public tools for it, but it pulls data from explorers like TZStats and TZKT. So you could also replicate that on TZStats and TZKT. I also think that the TIE offers customers access to similar statistics. So that's tzkt.io. It's a main block explorer, and another one is tzstats.com. It's another block explorer.
I'll definitely add those to the show notes as well. Now, I wanted to ask that from those metrics that you are tracking, or the kind of adoption metrics, for you internally, what is like guiding your business development decisions? What are the best proxies for adoption and traction right now?
That's a good question. I believe in a spaghetti theory, which is that it's a bowl of spaghetti, and if you pull on one spaghetti, you're probably going to pull most of the spaghettis with it. So the number I like is monthly active users, monthly active wallets. You don't know that a wallet is a different user, but there's not like a strong incentive for having many different keys, and so I think it roughly maps. And yes, some dApps will have users that don't necessarily make a transaction, but like a transaction is like it's a more meaningful interaction. So like how many different addresses interact with a chain every month. I also like every month over every day, because every day I think is a little DeFi biased. Like traders trade every day, but art collectors don't necessarily collect every day. So I think that's a decent metric for adoption. And there's different ones you could think of. You could think of like TVL for DeFi, number of developers on GitHub having a commit for every month. You could also have like volume transacted. But my point is like, look, if you have a ton of users in general using the chain, it's probably a good sign, and it probably pulls a number of developers, because you have a platform where a lot of people are looking to use. It pulls a lot of other metrics with it, and it's one that's actually like you can track. And it's also one where you can do attribution. So like there's a lot of metrics you would care about, which is like, I don't know, like sentiments. How much do people care about Tezos? People have a good opinion about Tezos. Like what's the rank of Tezos compared to other blockchains? If you look at that, those are great metrics, but they're not very good for attribution. Like you did something, well, what was the outcome of that? Whereas if you do something, the outcome in terms of like users on a chain is more measurable.
Yes, I agree with you 100%. It's quite important to be able to get to somewhat of a granular level in understanding what is actually happening on chain, and not just looking at individual metrics at a face value and top 10 rankings, etc. But moving from the application layer to the network itself, I want to speak a bit about your economic model and financials there. Could you maybe to start this section off, just briefly describe Tezos' economic model, so how value flows throughout the protocol?
So I'm also a bit of a contrarian here. I think fundamentally all of these, I think all of the main driver for value today in coins, or the main defensible driver, is store of value dynamic. And a lot of these are basically driven, are basically collectibles. Not like NFTs, but they're fungible collectibles, but they're collectibles. Like gold is a collectible, like silver is a collectible in some sense. That's true of Bitcoin. I think people have no trouble at recognizing that Bitcoin is digital gold and it has this like store of value dynamic. But I think that's true of almost everything. In some cases, store of value is more related to gambling. I believe also people are going to want to gamble with it, so I hold it because more people will want to gamble with it. In some cases, it's more like I'm fleeing a war zone and I need to hold my assets, and that's a primary driver. And it breaks people's head, and it broke people's head with Bitcoin early on. That's one of the reasons I was early on Bitcoin, is because I've been thinking for a very long time about currency, and that the ideal currency is backed by nothing. But people didn't like that. They said like, no, it has no cash flow. It can't have any value. And I was like, no, that's not how this works. But this whole idea of cash flows, like people desperately want this thing to be shares into companies, and they are not. Like people want to think about like this in terms of cash flows, and that's not a dynamic. So the latest incarnation of that is thinking of protocol revenue with like fees. And certainly it's possible that burning fees in protocol can bring revenue. But one has to bear in mind that protocols are going to scale. Of course, Tezos is scaling, and maybe Tezos is scaling first, and that's great. But everyone is going to scale ultimately. And when you have millions and millions of transactions per second and not necessarily that much demand, the revenues can go down. Like initially, as you scale more, you have more applications, maybe more fees are being paid, so total revenue can go up. But I think eventually it can go down. And maybe you have a sufficiently dominant position. Like there's a world in which you're basically getting like a million transactions per second, and people don't really care if you're charging them 0 per transaction or 0.001 cents, and like you make some revenue. But like the projections that I have in terms of fees is like, I don't think fees is going to be a very sustainable way of like creating value for blockchain. I think ultimately it's like the main primary use case is means of exchange, store of value. And that's what I think in Tezos. Now, it's good to hedge. I'm all for there being more transaction on Tezos, more Tezos being burned through transactions. But like very long term, if I had to bet on a driver, I would say it's the original use case of cryptocurrency, which is store of value, means of exchange.
Okay, got it. I think that is very well kind of explained, and also a bit of a contrarian thought, but that is that makes sense. I do agree with it to some extent. Now, the follow-up question that arises in my mind is related to long-term sustainability then. If like fees and burn aren't the main drivers around balancing token supply, incentives, etc., how do you maintain long-term sustainability in that system?
I think you just need to come from the store of value dynamic. So every store of value has what is called a convenience yield. The convenience yield is like what interest rate are you willing to forego in order to hold this thing? And so, for example, the reason Bitcoin might have a convenience yield is you say, well, I could be, why am I holding a store of value, right? Why am I holding a store of value when I could be instead buying whatever I want? If I think I'm going to want a house in 2 years and maybe I'm going to want to have some groceries, then the theoretical world, the very theoretical economic world where I could just buy futures on everything. So I'll buy, a future on like getting my meals for the next year and a future on a house and all of that. But I don't really know what I want. I don't really know the basket of the thing that I want. And so because I don't know this basket, you want to hold a liquid instrument instead that you can cheaply turn into other goods in the future. So that's the reason people hold savings in the first place. It's this optionality and this liquidity. Why hold Bitcoin instead of say dollars? Well, because you say, because it's harder to seize, right? So you're willing to pay for this. Like the fact you're willing to pay, and what you're paying is basically what subsidizes the value of the store value. It's this convenience yield. You don't really observe it directly, although in the futures market you can actually observe it. Okay, so what makes it sustainable? Store value, and it's a very circular thing. It's like as long as it's in a store of value and there's demand for people who want to save and people who want to transact, that's a route. And there's a point of it. There's a point of equilibrium. Like you need to have some inflation in order to subsidize your block creation and your security. And you have equilibrium where your convenience yield is going to basically tell you how much you can spend on inflation in order to secure your chain. And hopefully that's high. Hopefully that's high. But also I don't think you need a lot of money to secure blockchains. Like it's for proof of work you do. Like proof of work is super, super expensive. Oftentimes people come with like the proof of stake, proof of work angle. They come at it through the optic of the environmental impact. But if you look at the Tezos position paper and Tezos white paper, it argues it purely from an economic perspective. Like purely from an economic perspective, you don't have to spend that much money to get your security using proof of stake. So I think the cost of operation of a blockchain can be quite low. You can currently run, the Tezos data availability layer and the Tezos chain on a Raspberry Pi. So you can have the cost to be fairly low. You can have a bunch of staked coins for fairly cheap, and also like recovery from consensus attacks are actually cheap and they're actually okay. So people overestimate the need of a very large security budgets for blockchains.
Okay, sure. And because I'm so metrics focused, I also want to try to quantify or see if we can quantify what you just laid out there in terms of defining what is a store of value asset. Because if we think about the value accrual to your token, how should an investor or you internally assess the effectiveness of that asset of the store of value? What are the best proxies or like metrics or signals in the market that you can use to assess that?
It could be that people are speculating that it could be that people are convinced that somehow all protocols will end up having revenue and that will justify valuations. But I don't think that's true. Just to be sure, some DeFi protocols have very large revenue, but that's very different because they're not charging gas. They're basically taking a cut on trades. And their moat is they have more liquidity, so it's hard to reproduce because the liquidity won't move over, and as a result, they get to charge a rent on that. So those can be quite high. For fees, it boils down to how competitive the market is. If you have an uncompetitive market which will N1, and there's like strong network effect in being on the same L1 as everyone, then potentially you can collude to have like larger fees for inclusion. You can basically like restrict the amount of compute that's available to maximize profits and not have too many people move over to other blockchains. The fact that it's very difficult, technically speaking, to bridge chains and do it securely is one thing that contributes to that. If it were like very cheap to bridge chains, then the situation somehow is worse. And while I'm skeptical of the ability of bridges to be secure, they will only keep on improving. And just looking at meme coins, just looking at like the resilience of things like Dogecoin or Litecoin, I think it points to this narrative very, very, very strongly. It could also be that everyone's just deluded that everyone thinks this thing will have revenues, and somehow they'll be surprised as the revenues don't materialize. But I don't really think that's the psychology behind most of this. But I'm all for hedging. It's like there's nothing wrong. I think having a lot of usage, regardless, and having a lot of fees being burned on the chain is good for adoption, is good for visibility as a store of value in the first place. So I don't see a conflict. The only possible ways in which there would be a conflict is like in a position where, like, imagine Tezos is super dominant and has very, very cheap fees. Then it would be a question of like, is it worth cutting the fees even more because you don't expect to get much revenue for the fees and you just want to be like bigger and more use, or is it not? But like in the position that Tezos is in and is going to be in for the foreseeable future, there's just like no reason to try to focus on fees. Like fees should be as low as possible, and still every reason to focus on like user adoption, like creating network effects on the chain.
For sure, that needs to be priority number one. I do agree. I think that should be priority number one for every single project in crypto right now. I mean, looking at daily active users, aggregated daily active users across the market, it's ridiculously low still.
Yeah, I mean, some people you can game it in some ways. Like if you really focus on that metric and nothing else, like Near is an example of a chain who is like really, really like targeted that metric and got very high number. Also, it's very consolidated in like I think Sweatcoin, and you push the metric too much, it stops correlating to the things you actually care about. It's like how many people are actually like using several apps or knowing that they use a blockchain and so on and so forth. So there's that. One metric I prefer, by the way, is I call that +1 users. So a +1 user is someone who does something on a chain and then they do something on a different app. Because I'm saying like that person is not someone who's like blindly using an app and maybe not even knowing they're using that person is actually using the chain. So those +1 users I like as a metric. You got to be a bit holistic. I would say just like at the margin, probably that's one of the better metric to target for Tezos. But if we had like 10x, 50x more active users, I would look at other metrics.
I really like that +1 metric. Actually, I wrote that down right when you said it because that does make sense. When we think of a lot of individual projects that are able to abstract the technicality, abstract any like crypto related stuff in terms of onboarding users, say in the gaming space, the user does not recognize that they're using a specific network. So it is actually pretty important to some extent also understand which part of the user base is then becoming loyal, maybe not the right word to use, to the actual underlying network, not just that individual application.
Yeah, absolutely. I think the game you mentioned is like you can do a deal with the game where like the game will say like, oh sure, we'll have every user do a transaction every time they log in and we'll subsidize it when the user doesn't know what's going on. And so like, yeah, you'll boost your number, but like then when other apps look at your chain, they don't think of like these as users they can target. So you want your chain to be basically a good distribution channel. Like people need to see it as a distribution channel. And that's only going to be true insofar as like your users are users of the chain looking for different dApps on this chain, as opposed to like people who are user of a dApp and just happen to be using your chain. I think it's something that consensus recognizes. You can see some of that as MetaMask. Like the reason that MetaMask has been opening itself to multiple chains is because they see MetaMask as a distribution platform, and like growingly, people I think might think of themselves as users of MetaMask as opposed to users of Ethereum. They're saying like, oh, I use MetaMask. Sometimes I do a click to do another app, but like that's what they see, and there may be more user loyalty to MetaMask than there is user loyalty to Ethereum, which is an interesting situation.
Definitely is. And I think that is somewhat at the meta level that we aren't even thinking about that too actively in this space. So I'm glad you brought that up. That is a really interesting discussion. And I think a lot of people should be paying more attention to that. Kind of starting to wrap this up, maybe there's a lot of really interesting topics we already covered here. Looking forward, and given the current state of where you are now, no technical bottlenecks really, but a lot of work to be done on the adoption, getting awareness to what Tezos actually is and where your strengths are. What are the main initiatives or focus points that you have on that front that you hope will drive growth in the future?
Part of it is this thing is improving the core. So, we've had this success with the demo, a million TPS, we're building that out, but like really getting it integrated and getting a really, really strong developer experience, I think is a catalyst for growth. So a big focus on the core technology, because we are not an incumbent. And even though like the technology of Tezos is very good, it's much more comfortable to get adoption if technology is like 10x better than the competition. And right now it's better, but it's not 10x better. So one step would be to make it 10x better, to just be able to like have this like, infographics with a matrix showing like different protocols, throughput, latency, and so on and so forth. It should not just be a roadmap, it should be actual numbers that you can start viewing from like technological superiority. That's one thing. Number two is a perception gap. I would say that there's a big perception gap between like where Tezos actually is, not just in terms of technology and roadmap, but even in terms of users. Like I say, it's a weak point, but it's still like, but it's not very. The median blockchain has no users and no activity. So this is not Tezos. It's essentially a strong user community and a fan base that is not being recognized. I would say a lot of people have forgotten that Tezos exists. So I'll find people saying like, here's a list of the 20 protocols doing something on rollups, and they'll find like 20 of them, and they just won't be on the list, and there'll be like some obscure stuff on there. So that's a little weird. Definitely getting a good marketing team has taken some time over the past couple of years. There's one being rebuilt at the moment in London, so I have good hope on that. And fixing the perception gap, I think, is a big catalyst. And so yes, establishing a technological superiority, and then fixing the gap, I think that can drive a lot. And also like focusing on a few key applications, which I think can drive users to Tezos. I think in a DeFi space, there's possibility to do a lot more than we've done, and to also innovate and outcompete a lot of like what's out there.
Makes sense. Hope that marketing team you're putting together in London manages to nail the job. There's a lot of stuff to get out there, and hopefully they're able to nail it. Now, you spoke about technological superiority. I want to tag on to that because a lot of both crypto native and non-crypto native investors on this pod have actually criticized the broader space for being too technologist focused, and that the tech in many instances is already good enough and the focus should be somewhere else. So I wanted to ask you, as being technologically superior is a focus point, what stakeholder is that for? Do you believe that the user cares, or is it more from a developer perspective? Or could you maybe speak a bit about that?
Yeah, it's very much from a developer perspective. And I think, you also, first of all, you have to play to your strengths. And like where Tezos historically has been strong has been in the quality of, it was the first major proof of stake protocol with slashing to launch, the first time governance was being deployed on chain. So it's been very, very strong technologically. And I think like playing to that strengths as opposed to trying to copy what everyone else is doing is probably a better strategy. It's not enough, but definitely we should exploit it. And just being, it's like if you're good enough and you are a top chain used by everyone, then sure, maybe you should focus on adoption. If you are competing to like get your slice of the pie, you need to be much better than the incumbent. And so I think technological superiority for a protocol like Tezos, which has a smaller market share, is quite important. And you can try to chase applications, you can try to chase users, but like you need to give them a very, very strong reason to build on your chain, because all else equal, if you just say like, oh, it's good enough, and then say, well, if it's good enough, then why wouldn't I go on some of the major protocols? And you say, well, or they say like, oh, pay me. That's not sustainable. That doesn't really work. So you want, some people will build because they're fans of the protocol, but my ideal is like I want people who hate Tezos to build on Tezos because that's the only platform that will fit their use case.
I love that, actually.
They're like, damn it, I have to build on Tezos now. I don't like this. I don't like this guy Arthur, but you know what? I'll build on Tezos because it's the best platform. That's the ideal outcome.
That is actually a really good approach. I like that a lot. Now, just final question, kind of continuing on this visioning. The vision is to have everyone who hates Tezos build on Tezos. But even in the bigger picture, when we think of global economy hopefully going crypto native in however many years, What does success look like for Tezos?
I think dominance in every category is like having more active users than any other blockchain, more fees being spent, more fees being spent than any other blockchain, more users, just all of the metrics that we discussed, but higher. Like, yeah, I would say that's number two. I say sometimes number one is survival, and number one is survival, number two success, and that can seem. I was saying this to someone the other day, and it was like, oh my god, it's depressing. Like, it's not inspiring. And I disagree. I think we've forgotten this, but like a lot of these protocols were built to be very resilient against attacks. We're going to keep seeing attacks against protocol. It's hard. It's hard to survive in an environment like this. And if you just survive for a very long time and you're very reliable and you're not like people can depend on it and the protocol keeps getting better and better and better and it's very, very stable. At the end of the day, if you look at what those protocols are supposed to provide, they're supposed to provide a secure and predictable platform. You accumulate that. You accumulate a lot of brand respect and a lot of brand value around this. And you can't win if you don't survive. So I would say, number one, survive. And number two, be as massive and as successful as possible.
Amazing. That is a great note to end on. Thank you so much, Arthur, for giving us this comprehensive overview of Tezos.
Pleasure.
And I wish you all the best for both surviving and then dominating.
Thank you.